In this video, we are going to be looking at Objective 4, prepare the cash flows from used for financing activities section of the statement of cash flow. Now remember that financing is going to be your long-term liabilities and your stockholders' equity. So they will have to give us information about this. So it looks like we retired some bonds, which means we paid them off. So that means that our cash would go down by the $50,000 that we paid to retire the bonds. So cash used to retire bonds, negative $50,000. The common stock, we issued some for cash. It looks like we got $8,000 cash. And not just $8,000, because remember, when you issue stock, you debit cash and you credit common stock and paid in capital in excess of par. So common stock increased by $8,000 and paid in capital in excess of par increased by $40,000. So the total cash that we received would be the $40,000 plus the $8,000. So $48,000. So we got a total of $48,000 from issuing this stock. And here it is. This is the cash that we got from the stock. Okay, dividends and dividends payable. The retained earnings account of Rundale indicates cash dividends of $28,000 were declared. We don't care about the declared amount. We care about the paid amount. So we need to see how much we have left over in our dividend payable account and how that will affect the $28,000 declared. So we can look through here and see, well, we definitely care about the cash paid of $10,000. So this is our dividends payable account. So we reduce the dividends payable by the amount that we paid out. So we had $10,000, we paid out $10,000. So right here on June 10th, the balance is $0. And then on July 10th, we paid more out. So $10,000 plus $14,000 would be $24,000 of dividends paid out. So $24,000 is the amount that are financing from the dividends, the amount that it will go down from the cash paid from those dividends. Let's go ahead and look at some other ways that the textbook is going to have us calculate this. We can find out our dividends declared from our retained earnings balance. Then we have to account for the decrease in dividends payable or the increase in dividends payable to calculate the cash dividends paid. So if dividends payable went up during the year, then you would have to subtract that out. If dividends payable decreased during the year, then you have to add that back. You can memorize that, but I'm going to explain why so it makes more sense. So let's say that we declared $30,000, but let's say our dividends payable went from $500 up to $600. If that was the case, we didn't pay everything we owed, did we? What did dividends payable do from 2019 to 2020? Did it increase or did it decrease? It increased. That is because we didn't pay everything we owed. So that means we held on to our cash. So if we held on to our cash, then we need to subtract out what we held on to from that $30,000. Because we didn't pay it all. We paid it all except for the $100. So that is why an increase in dividends payable needs to be subtracted out. We did not pay that much. Keep in mind that when we pay a dividend, of course, that's going to be a minus because we're using cash. But in this case, we held on to 100, so we would subtract that 100 out. So we really ended up paying out $29.9. So you can memorize this rule, or you can think through it each time, or you can do a combination of both of those. In this situation, the cash dividends paid by Rundle is $24,000, and we would compute it like this. The dividends declared is $28,000, and then the increase in dividends payable needs to be subtracted out. And the dividends paid is $24,000. And that $24,000 that we paid out, you can see that it would be a negative because we're using cash on the financing activity section. Here is the example exercise that you can pause and work and check it. And then here is the whole statement of cash flow. There's no need to memorize every line here, but what you do need to memorize is that you start off with net income. You remove non-cash items, analyze current assets and current liabilities, and then do investing and financing activities. And then that gets you to your net increase or decrease in cash. And then get the beginning balance from your balance sheet. And then the bottom line here is your check figure with the ending cash balance on the balance sheet. So you don't have to memorize all this because you just get that off of your balance sheet. So you just want to memorize that format as you go.